So, Mike, as we were talking about the weakness in semiconductors
Yeah.
that we're seeing again this week, NVIDIA's earnings did not have the reaction that everyone was expecting in the markets. We, a couple of weeks ago, put out clarity on Supermicro, SMCI, because we were talking and focusing about the differences, the subtle differences between reaccumulation and distribution. And in the SMCI article, we referenced ARM, another semiconductor company, hasn't been around very long. In immature charts like ARM, we tend to see Wyckoff cycles happen very quickly.
Okay.
And I'll show you that. In Clarity itself, I posted this chart or shared this chart and talking about and trying to help our members differentiate between what is real analysis and what is typical content that they'll see online. This is an example of it here. This is just a plain old trend line chart that you'll see posted out in the FinTwit universe talking about how this looks like a bullish setup for
Yeah.
ARM right here because it's bouncing off of its all-time support line here. What they typically don't share is this volume profile right here, and they don't share this bearish divergence. So the peaks are declining here on relative strength index while the peaks of price are going up. So this shows that they are not in harmony. What that means is that there is bearish divergence and a downturn or a change in trend should be expected here, and that's exactly what we got. So we went on to then show some of our analysis, what we're currently seeing in ARM. We are seeing some distribution here. We do see a very top-heavy volume profile. We do see the bearish divergence that we talked about. We do see a 5-wave count Elliott structure here. So what we see is accumulation, reaccumulation, distribution, an upthrust after distribution to complete this impulsive 1, 2, 3, 4, 5 count wave. Then we should expect, coming out of distribution, we should expect some markdown, which is a corrective wave. It also fits nicely with this big gap that we have right here.
Yeah.
So if we jump over to the chart today, same chart, all we did was add this reaccumulation in this shaded box right here to represent this gap and this key pivot area, where you can see that this gap has been defended here, and we also can see that we're beginning to see price push off of these now downward sloping moving averages.
Right.
We've talked about across the entire semiconductor sector that we are expecting to see we're expecting to see some sort of reaccumulation as we get later into the seasonal volatility that we're expecting. And ARM is perfectly set up for it. We expect this to turn into a 3-wave, wave B right here. There will be some sort of action, some sort of push up here to draw in liquidity. This peak right here will be defended, push price down in here to fill this gap. So we see this as a redistribution and potential markdown with a great looking entry here at the same level as reaccumulation.
And you were saying accumulation tends to or can often happen in periods in places of reaccumulation previously.
That's correct. That's correct. So reaccumulation, former reaccumulation zones are institutional bases. So institutions bought here, they accumulated their initial position. They reaccumulated here because they knew they were about to make a big push right here, which they did, and sold it off.
Yeah.
Then they brought it down here, bought the dip right here, only to run it up again and draw in a bunch of more retail investors to unload the rest of their position. They're now short. So they're going to ride. They're going to bring in some more. They're going to bring in some more retail investors to sell into, reload their short position that they just took profits on, reload that right here, and then take it down, fill this gap, and then probably reaccumulate at this reaccumulation zone.
That's awesome. That's great. And that's our 5 minutes.
Yeah, give me 1 second.